High-flying battery metal companies run into turbulence, and U.S. sanctions against Nicaragua hit miners. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is here. How you doing, Paul?
Hey, Michael. Good afternoon.
And with us is returning guest Hugh Agro with Revival Gold. Hugh, other than hosting Paul and a bunch of journalists, how was the summer season?
Oh, it's been super, and why not? I mean, we've had some great drill results out of the Bear Track Arnett project in Idaho, and we've now got 20 drill holes in this exciting Joss zone with average grades just under 8 grams over a kilometer strike. So pretty exciting time. Lots of visitors.
I want to note, Paul, you did get to the site. I think it was last month.
That's right. September after the gold shows, I kindly was hosted by Hugh and a couple of other companies in Idaho to go and tour their operations.
Let's turn to macro, a busy week. Metals are under pressure with negative sentiment prevailing. Goldman Sachs CEO David Solomon said this week it is likely that the U.S. and Europe will have a recession as the Federal Reserve continues to tighten monetary policy, with a projected 75 basis points next week and another oversized increase in December. So far, the Fed has raised rates by 300 basis points this year, and Solomon doesn't see the Fed pausing until the federal fund rates reaches 4.5%. The big data point this week, which drove home views that the economy is wobbly than perceived, was home sales, which dropped more than 10% in September. Economists were looking for a 4.4% drop. Earlier this week, as stock markets crashed in Hong Kong, Shanghai, and Shenzhen, Xi Jinping cemented his leadership last weekend, which markets greeted with a Bronx cheer. The Hang Seng Index hit a 13-year low on Monday. It is the world's top index loser in 2022. Asian markets woes dinged copper, which is now trading in the $3.40 pound range, and gold is in the $16.15 range as of this recording on Friday, 1 p.m. Eastern time. Hugh, now you run a gold development company. What's the thesis you're hearing for investing in precious metals sector?
Yeah, just back from marketing in New York, and I'll tell you what, there's a lot of concern about this inflation, up 8%, 40-year high. And at the same time, you're seeing the tech bubble bust. I mean, just yesterday, we saw a 20% drop in Meta. The other tech stocks of note, Google and Apple, are off 30% this year. So this is a big break. And meanwhile, investors are looking at hard assets, and we're seeing that in the oil and gas stocks. $20 billion profit out of Exxon this quarter, third quarter, and Chevron $11 billion. These are record levels for these oil companies. I don't think gold's going to be far behind, and certainly that's what we're hearing from the investors. They are positioning themselves. There's a lot of caution out there, but I think that's the next sector in the rotation. That unloved gold sector is about to get a big bright shining light on it.
One last note on macro was financials. We had some big companies in the battery metal space reporting. Vale and Eramet both noted that their Q3 was hurt by declining nickel prices. Rare earth miner Lynas called rare earth pricing this past quarter volatile. Vale's quarter was down 1.5 billion compared to the previous quarter, mainly due to declining iron ore and nickel prices. To finish on a bright note, Caterpillar sales were up 20% in the quarter compared to the same quarter a year ago and 6% higher than Q2. Mining sales equipment performed strongly, reported the company. Let's turn to miners, but first, our sponsor. Snowline Gold, ticker SGD on the Canadian Securities Exchange, and SNWGF on the OTCQB, is a Yukon-based explorer with one of the territory's largest mineral portfolios, amassed privately over 3 decades by prospectors Ron and Scott Birdall. Snowline is going big. The company controls more than 250,000 hectares of the Yukon Selwyn Basin, a prolific yet underexplored geological analog to Nevada's Great Basin. It is focused on a district-scale greenfield gold discoveries with the goal of finding world-class gold deposits. And they're on the right track. Their Valley discovery has yielded drill intercepts of up to 2.5 grams per ton gold over 319 meters, including 4.1 grams per ton over 108 meters from surface within a much larger zone of mineralized rock. Most of the results from their aggressive 2022 drill program are still to come. The company is also backed by some of the best. Significant shareholders include Keith Newmeyer, Crescat Capital, and Eric Sprott. Snowline is well financed. It has over 25 million Canadian in the treasury, providing stability and a long runway for future exploration. Learn more at Snowline Gold, ticker SGD on the Canadian Securities Exchange, and SNWGF on the OTCQB. Once again, that's Snowline Gold, and we thank them for their support. Paul, there was a lot of mining news.
Well, thank you, Michael. A bit of an odd week for news this week. Pure Gold Mining started the week out with a lot more woes there, as it put its Pure Gold mine in the Red Lake district of Ontario in Canada onto care and maintenance after failing to raise new finance to keep operations going, despite increasing production and cash flow. With the share price languishing, the company's expectation that some 13 million Canadian could be raised through the November exercise of warrants is likely to be frustrated. It said that without additional outside financing in the short term, it will not be able to meet its obligations and will be in default of its debt. As you mentioned at the top, Nicaragua. An executive order by US President Joe Biden and a US Treasury announcement targeting certain officials in Nicaragua and its gold sector created an atmosphere of uncertainty for Canadian listed gold companies in the country who are unsure of what the effects of this may be on them. Companies including Calibre Mining, Mako Mining, and Royal Gold Minerals said the sanctions are not targeting their activities directly, and therefore they're not expected to have an impact. Gold is Nicaragua's biggest export, representing about half of its export earnings, with the US being its primary export market. In Chile, the government submitted a long-anticipated mining royalty bill featuring a flat rate ad valorem, or revenue-based tax of 1% for large-scale copper mines, and an operating margin aspect. Analysts estimate this will boost the government take from about 37% to about 50%. However, there's a lot of debate still to happen before this bill becomes law. On the positive side this week, foreign mining received 33.4 million Canadian dollars from leading shareholder Fairfax Financial, who exercised about 28 million warrants well ahead of time to boost its stake from 23% to about 28%. The Fairfax funds will be used to procure long lead time items as foreign advances towards a construction decision on its McIlvenna Bay copper zinc gold silver project in Saskatchewan in Canada. Debt financing is due to be completed this year. Matador Mining attained a $3.6 million Australian strategic investment from B2 Gold to advance exploration in Newfoundland in Canada at its malachite target. B2 Gold agreed to purchase a 9.9% stake in the junior. Finally, in Idaho, Perpetua Resources said its preferred alternative for the development of its stibnite gold and antimony project has been supported by the US Forest Service. Perpetua believes a draft record of decision could come in mid-2023 and a final decision following in 2024. Hugh, let's bring you in here. How important is this decision for Idaho and for Perpetua specifically?
I think it's an important milestone, clearly, and we're seeing that in the stock price today, trading up. More generally, there's a lot going on in Idaho. I've just come back from a stop at the Idaho Mining Conference, and there's a lot of excitement, enthusiasm, record attendance at that conference, and I think Perpetua has been a big part of that. These guys raised the bar in terms of exploration and mining in the U.S., in terms of the quality of the work they do, the environmental performance. This supplemental EIS is a super milestone. It's a very big project. And as you say, they're working towards a record of decision by the end of 2023. So very important for Perpetua, top class operator, largest reserve of gold in the U.S. Under development, and also the highest grade. So this is very exciting for Idaho, very exciting for Revival Gold as a neighbor.
Sorry, I just want to just to add on that. There's a lot going on in Idaho. So, up in the north, you look at what's happening with Bunker Hill. It looks like they could be very close to production because they just have to get through some of putting in their milling capacity. You look at over at Hecla. That's been a real turnaround story. You look at what they're doing out of their Lucky Friday right now in terms of the production updates, being able to sort out the issues that they had with their labor. And then you swing down into your neck of the woods, Hugh, with what's also happening with Jervois. And then that's when you go into the battery metal space that has happened there. This district, this state is just performing very, very strong.
Yeah, the energy is palatable. I mean, we've got some really super developers. I would add Integra in that, Liberty, doing great work. And I would also say that, we've got a very favorable state government making all the right decisions. Just generally, I mean, this is a state that accumulated $1 billion in surplus during COVID. So they run a really tight ship. They run really good policies, and the population, the local communities really embrace these projects. Jervois is a great example here. That's been a long time coming, but they're really celebrating the first cobalt mine in the U.S. And I know you'll want to talk about this more, but there's a real onshoring trend in the U.S., not just in terms of manufacturing, but also in terms of domestic mineral production.
Paul, you were asking a question when I cut you off there.
Yeah, and before I do that, just to follow up on Hugh's last point there, I participated in a webinar yesterday in Arizona, and they see the same thing there. There's a lot of companies coming down from Canada and also relocating from other parts of the US to invest in Canada, not just in the mining sector, across the broad economy. But the point I specifically wanted to ask you, Hugh, follow up, I guess it's really encouraging that a US agency, the US Forest Service in this instance, is basically agreeing with the approach that a mining developer plans to take. Because I understand as part of the process, they do a sort of what-if analysis on various different options and possibilities to really check that what is being proposed is the best route forward. So it must be very, very encouraging that the US agencies are agreeing that with a mining company that what you're proposing is the best way forward.
I'm not going to kid you. It is an arduous process to permit a new mine, and particularly in the U.S. and Canada, where we have high environmental standards and lots of public review and process. What I would say is that Perpetua has done a really good job of that, and they have evaluated these alternatives. They've come up with something that makes a lot of sense. I mean, it's a cleanup of a legacy Superfund site on top of being a top U.S. gold producing opportunity. So there's a lot of advantages to this project. Takes a lot to go through that work. I know this is a big milestone for the Perpetua team. My hat's off to the folks who've gone through that and had the patience to go through that. Their next steps become a lot more clear, and we're cheering for them.
Thank you.
Hugh, what's a financing picture like for juniors? I assume it's still rough out there.
It is certainly. There's a lot of risk aversion in the market, as we've discussed. Something I observe though is that there's no shortage of money available to invest in precious metals for the aforementioned themes. I mean, we've got record inflation, we've got a turn of the tech sector and the broader S&P market. We've got real assets revaluing, oil and gas being the major one, and so that's a great setup for gold. So there is money there. It's looking for very good terms. It's looking for, in a lot of respects, these convertibles and debt-like structures, and we're seeing some of those financings being done. So this is the state of play. Creates great opportunity for investors who have a longer-term view, of course, and there are a number of those out there. So we'll watch this space. It'll turn quickly when it does.
I think that's a sentiment I've heard, just kind of talking more broadly about the economy. Sentiment is obviously bearish. You can take whatever factors, property over in China, energy crisis in Europe, but there seems like there's a lot more cash. Investors have a lot more cash that they can actually deploy into these dips. Question. Oh, go ahead, Paul.
And Hugh, in terms of all that feedback you've been getting, what do people think will be the catalyst? Is it a case of just rolling into another calendar year? January is typically a good month, or starts off being a good month for gold. Is that just going to be the catalyst going into a new year, getting all the mental baggage and all the anguish of 2022 out the way? new year ahead, new approach, clean slate, woof, away we go.
I think it's a break in the U.S. dollar, and that's undermining the gold price performance in U.S. dollar terms. But in any other currency, gold price is up. It's doing its job relative to local assets, and we've seen what happens when reserves, central banks break. We've seen it in the UK. We've seen it just recently in Canada, where the rate raise came in at 50 basis points, lower than expected, and of course drives the value of the Canadian dollar down. I think it's just a matter of time before that happens in the U.S. Again, we've seen this play before, and when that happens, that'll be the signal.
Hugh, how do you quantify a jurisdictional risk? Now, we were talking about Idaho. It is a state that is favorable towards resource companies. But if you're investing, if you're looking at development companies, say with all else being equal, and you've got yourself a first-tier mining jurisdiction, and say you're in a locale which might not have mining regulations and not be well supported, how do investors quantify that risk?
Yeah, very difficult to do. My first piece of advice around that is to be diversified. You've talked about Nicaragua, but there's also the Congo, where we've had some recent incarcerations. Before that, we've had changes of government and coups in Burkina Faso. We've got this changing law and situation in Chile and in Peru. These are all great mining jurisdictions from a geology point of view, but they've certainly made a mess of themselves with the geopolitical risks, and those tides shift, and so diversification is the first means to work around that. But it's very much the case that you have to look locally, and I would point to B2 as an example of a team that operates in some pretty otherwise tough places, and they do it with local teams and with understanding of the local situation. That's the key.
Let's turn to our number of the week. Hugh, guest is first.
Okay, I'm going to give 136, which is the number of tons of gold that has left the United States since April. And the flip side of that is 160 tons of gold going into China, 80 tons going into India. And this underpins a theme that Bloomberg picked up on earlier this month, which is gold is moving from west to east. And I think they know something about what's about to happen to the US dollar and the importance of gold as a backstop to currency.
Paul, what's your number?
My number is 1,117. Or to be more precise, 1,117 US dollars per ounce, all-in sustaining cost. That's the average of the gold companies who have reported so far their September quarter results. That $1,117 per ounce is some 3.8% less than the average all-in sustaining cost for the June quarter. So it seems inflationary pressure is perhaps starting to come off.
I have 2 4s, or a 2-4 as my number of the week. Joe Foster, who manages active gold fund investment firm VanEck, which is Yamana's biggest shareholder, came out against Gold Fields' acquisition of Yamana. Foster said the merger would create a more complex company with not much synergy, and both Yamana and Gold Fields would do better on their own than as a combined group. That, according to Reuters. VanEck is also Yamana's 4th largest shareholder, and if the acquisition went ahead, the combined companies would create the 4th largest gold company. Voting on the deal is slated for November 21st. Paul?
Just one sort of comment there. Joe Foster at VanEck is one of the most vocal proponents for more consolidation in the gold sector. So it's quite amazing that he's saying that actually this isn't a good deal, or in his opinion, it isn't a good deal.
That's it for us. Hugh, what are the milestones at Revival over the next 12 months?
Well, we've got a lot of drill results to come out, and a PFS on the first phase heap leach, which will be out mid-23.
Follow me at Michael McCrae. That's McCrae with 2 C's. Paul is at Paul Harris Gold. Hugh, how would you like people to get a hold of you?
On our website, contact information is available there, www.revival-gold.com.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of Paul Harris, Hugh, Agro, and myself, have a pleasant weekend.